Invest a few minutes of your time watching this video and you'll gain financial knowledge that could grow with you for the rest of your life. If you don't want to become wealthy, not just in money, but in knowledge, then skip this video and doom scroll all day. But if you're ready to invest a few minutes into something that could change your financial future, keep watching. Today we are diving into real rules of money, the ones they never teach you at school, which is taxes, banks, interest, inflation, credit scores, investing, and why time is your greatest asset. This isn't just another video. This is a tool, one that could help you build real financial freedom over time if you choose to learn from it. Let's start with something that hits every paycheck: taxes. Imagine you just got paid $1,800 after a tough month at work. Maybe you're delivering food, tutoring students, or managing shifts at a local store. You check your bank account and only see a $13-20. So where did the rest go? Taxes, which include federal, state, social security, Medicare. All that's taken before you even see the money. But here's the truth. Taxes fund the system we rely on: roads, schools, public safety, and emergency services. They are not optional, but they do serve a purpose. Different taxes affect you in different ways. Income tax takes a cut from what you earn. Sales tax shows up at checkout. Capital gains tax hit when your investments grow. Social Security and Medicare, they are just designed to support you later in life. Banks. You walk into a bank, deposit your paycheck, and assume your money is safe in a world guarded like gold. But in reality, banks don't just store your money, they lend most of it out. That's how they make money, by borrowing from you and lending to someone else at a higher rate. This system is called fractional reserve banking, meaning banks only keep a small percentage of your deposits on hand. As long as not everyone shows up asking for their money at once, everything works. But when they do, like in 2008, the whole system can collapse. The upside: banks offer convenience, safety, and even small interest on your deposits. Plus, in the United States, most banks are insured up to $250,000 per account. So even if the bank fails, your money is still protected. Interest. Interest is a silent engine behind both wealth and debt. Borrow $1,500 and pay back $1,800. That extra 300, that's interest. It's the price of using someone else's money. But when you save or invest, interest becomes your reward for being patient. There are two main types of interest: simple interest, which is a flat fee, and compound interest, where your money earns money and then that money earns money too. $10 coffee could cost you $30 in a few months. The rule: if you're paying interest, get rid of it fast. But if you're earning interest, let it grow. Inflation and recessions. Have you ever noticed that your money buys less over time, even if your paycheck stays the same? That's called inflation. A $5 sandwich now costs $6.50. A $50 tank of gas now costs $70. It doesn't happen overnight, but over years, it quietly eats away at your purchasing power. Inflation happens when demand outpaces supply, when production costs rise, or when people expect prices to go up and start spending now, making prices even faster. To slow it down, central banks raise interest rates, making loans more expensive and slowing spending. Sometimes this leads to a recession, two straight quarters of economic decline. Jobs disappear, markets fall, people tighten their belts. But history shows that economies recover and eventually growth returns. Credit scores. Your credit score is a three-digit number that holds surprising power. It decides whether you get approved for a loan, how much interest you pay, and even whether you can rent an apartment in New York. It's not about how rich you are, it's about how trustworthy you appear to lenders. A score above 720, you're in a prime territory. A score below 550, you'll face high rates or rejection. Your credit score is based upon your payment history, credit utilization, length of credit history, types of credit used, and recent credit inquiries. And the best way to build your credit score is to make payments on time, keep balances low, and avoid opening too many accounts at once. Investing and value. If you want to beat inflation and grow real wealth, you need to start investing. That means putting your money to work for you, which can be through stocks, bonds, real estate, and index funds. It's not about luck, it's about being early, staying consistent, and giving money time to grow. Wealthy people didn't all win the lottery. They gave compound growth for 20, 30, or even 40 years to do its magic. And the key to wealth? It's value. If you create something people want, whether it's a product, a service, or content, you can earn from it. That's how people become rich, not by hoarding cash, but by delivering value others are willing to pay for. Time. Time is the most powerful asset you already have. You start with more of it than money, and no one gets more than 24 hours a day. Top earners didn't get lucky. They trained their time to work for them. And nowhere does time work harder than in investing. A little money invested consistently over decades becomes a lot of money. That's how ordinary people with modest incomes can retire with seven figures. They didn't beat the system, they used it. So remember, wealth isn't built by chance or timing the market. It's built by mastering your time and letting time do work for you. And to conclude, money doesn't have to be a mystery. Once you understand how the system truly works, how banks, taxes, credit, and time shape your life, you start taking back control. You stop playing by the rules and you start playing to win. Every decision you make, every bit of knowledge you gain compounds over time. So start today because one smart choice made right now can completely change the next decade of your life. If you value growth, clarity, and financial independence, subscribe now. This is where you level up. Now you have just invested in your future. Let's make sure it compounds and pays the best returns of your life.